Okay guys, welcome to today's video. We are going to be looking at a very important topic today: swing trading, day trading, and scalping using SMC. Now, of course, I think when we started this challenge during the first video, I think the day one or day two video, I talked about basically day one. I talked about the steps you need to become a better trader. What you need to do. For example, so someone just comes to you and say, "Smart, I want to be a trader. I want to be a trader. How do I get started?" There are steps to actually follow, and I explained it on day one video. I said the first thing you want to do is to what understand the market first thing, then you go and learn candlesticks and candlestick patterns, then understand market structure, then have a what once you learn candlesticks, you understand market structure, how the market moves, the behavior of the market, then you learn everything about cryptocurrency in general, right? Crypto market, forex market, you get that basic education. Then you look for a particular strategy or methodology that works, right? Then after that, after you're now good, you now pick the kind of trader you want to become, right? Either if you want to be a swing trader, a day trader, or you want to be a scalper, you must not be the same, right? All of them are good depending on which one you are mastered based on your personal what's it called, I can say personal conviction, right? So all of them, so whether you want to be a swing trader, whether you want to be a day trader, or whether you want to be a scalper, you can choose to become anyone, right? Anyone you want, right? So all three can work with SMC, right? So but traders will choose what based on their lifestyle, right? Based on your patient level and based on your mindset, based on your psychology. Okay, so in this video I'll be explaining everything, so that now that you are learning the skill, you can now decide that, oh, because of this I want to be I think I would just rather be a swing trader. Because of this I think I'll just be a day trader. Because of this I think I'll be a scalper. Okay, so what is a scalper? Let me start with swing trading. What is swing trading? Swing trading, the difference is just the basic difference is time frames and how long. So the difference is time frame and patience, right? Swing trading is, as a swing trader, you're willing to hold trades for longer period of time. You want to catch big moves. You want to use higher time frames. You're not concerned with lower time frames, right? You are ready to wait for moves. Of course, I'll take you guys to the chart to explain those things. They are practical terms, right? While the traders, day trading is just you want to enter and close a trade within a day or two. Okay, while scalpers typically wants to finish, enter and close a trade in the same hour, within 4 hours, within 5 hours, right? They want to enter and they're out of the trade within minutes. Okay, so it's just now depending on time frame. You can still follow the same SMC setups, right? But at least you need to know everything. So SMC works for scalpers, SMC works for day trading, SMC works for swing trading. It's just how the time frames they use for their entry. Now, as a swing trader, right? Basically, swing traders use 4 hours, right? And they use daily time frame for their entry. 4 hours daily time frame for their entry. So they don't need to, if they have looked out market direction from higher time frame, say the monthly, the weekly, they confirm with the daily, they go to 4 hours to take their entry, right? Because they go to 4 hours and then they can even maybe redefine their entry and basically use 1 hour if they want to get a redefined entry. But basically, once they have seen market direction, that market is going to bounce from this region, they will take their trade. Okay, but a day trader would use these 4 hours and daily for his analysis and would want to enter his or her trade based on what, 15 minutes and 1 hour time frame. So we are looking for 15 minutes order block or 15 minutes point of interest to enter our trades, right? Why this one now, they are looking for 4 hours daily to enter their trades. So we'll go to chart, I'll explain it very well. Why scalpers typically looking at 15 minutes to 1 hour for their entries, for their direction. Then they are going into what? They are going for 5 minutes, 1 minute, right, and 5 minutes for their entries, right? So let me explain. So you, as an SMC trader, you know the basics of XMC. You look out for the same thing, right? Me, I'm a day trader. I try to look for my trades, but sometimes I can enter swing trades. If I see the direction is going very long, market is going to go to this way, I can enter. I can be swing trading it, or I'll be entering multiple, since I know the directional bias. Instead of holding the trade for a very long time, right, I can now decide to be entering different trades. So let's just go to the chart so that I explain it better. I think it's practical, right? If you have been following my videos, this is BTC, right? BTC USDT. If you have been following my videos, I think day 6 or day 7, BTC was around this region where we saw an impulsive move to this side, right? We saw an impulsive move to the upside. Now, I said I did an analysis and I was like, okay, using this what imbalance. If you are just coming across this video, you might not understand the analysis, so you need to go to other day to understand. So we use this imbalance as our point of interest to enter a trade, right? You know, we took our first trade here, we exit at this liquidity point. Then we took our second trade off this other imbalance, right? 50% level of this imbalance, which was just resting across here. This is where we took our second trade. Now, if you look at this well, right, based on this 4 hours analysis time frame, you can see, if you calculate how the distance that market used from this high to dump, this high is at Monday the 14th, right? 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, right? Saturday, August. So it took the market for about 2 weeks, right? 2 weeks to make a dump. It was even more than 2 weeks, right? Took the market about 2 weeks to make a dump from this region to this region. Now you want to take a buy, and you know that market is going to target this high. This is your TP, right? But remember, 4 hours is your analysis time frame, right? But you know that, okay, market is going to bounce off this POI, right? So now you want to wait. Of course, market shifted structure, right? There was a shift in character here. Confirmation traders, which are basically day traders, would enter their trade here and exit at this high. Now, but you have done the analysis on the 4 hours time frame. You know that there's a 4 hour point of interest that market is coming to, right? Now, if I enter a trade here, okay, of course, I I did this trade. We took this trade live, right? We did this analysis live. The higher time frame target is here, right? Stop loss is just below this low. Now, if you notice what the market did, let's calculate how long it took market from this POI to our exit. You know, market moved from what? Internal range liquidity, right, to external. This was the external range at this high. Internal here was the imbalance. So market moved from what? Internal what to external. You can see the TP taking out. So now let's look at this. How long it took market from when we triggered. This was Saturday 2nd, and TP was happened 14th. It took market 2 weeks, right, to move from this point of interest, our entry, to TP. 2 weeks. Now, this is not a typical trade for a day trader, but it's a beautiful trade for a swing trader, right? Now, a swing trader can do this analysis, enter at this point of interest, and they will take TP at this high. Now, if you look at this trade, it's a clean 1:6. 1:6.2. So if I'm risking $1,000 for this stop loss, I'm going to make $6,000, but I will do that while waiting for 2 weeks. So this is how swing traders. Now I'm taking my entry off with 4 hours, just like what we talked about. Now a swing trader will typically look at this analysis, and they'll take their entry here, stop loss here, and their TP would be here, as long as they know that their direction is correct. So no matter the noise market is creating, you can see how the market move, pump down, pump down, pump down, pump down. It does not affect them. Now they hit TP because the analysis is correct, right? Now for a day trader will not trade it like this. What would a day trader do? Let me show you. Now, a day trader would also, because you must still on no whether you're a day trader, a swing trader, or a scalper, you still pay respect to higher time frames for your analysis. Now, a typical day trader uses 4 hours and one daily time frame for his or analysis. Now, a day trader would not take this trade directly like this. What will a day trader do? A day trader will mark this point of interest, and a day trader would wait. Right? This was the previous low that push market down. A day trader will wait for that confirmation. He knows that if I have to enter a trade off here, my stop loss would be here, and my TP, for me to make a 1:4, my TP needs to be far away. So a day trader would what? Mark this as a point of interest and go to slower time frame to see shift. Right? So a day trader will wait for this market to shift structure right here. Right? This is the shifting structure. Now this is 4 hours. Right? It will now shift to say 15 minutes time frame. Right? This is what a day trader will do. A day trader will shift to 15 minutes time frame. Now the swing trader has entered this or trade, right? But the day trader has not entered. He's waiting. Now this is the market structure shift that has happened here beautifully. Now market also created a form of imbalance here. Remember what we talked about? Higher time frame point of interest was an imbalance. So the smaller time frame N3 on 15 minutes will also be from an imbalance. So what would the trader do? It would mark the particular imbalance right here. They are trading the same thing, but now he knows. The day trader also know that, oh, this point of interest may hold, but he doesn't want to hold trade for a 1:6 trade for 2 weeks. He does not want that. So what he does is he marked this point of interest right here. Right? I can now go to 4 hours to set areas where I want to put my stop loss. Since my point of interest is here, I can put my stop loss just below this region. So what does the day trader do? The day trader enters long position at this POI and put his stop loss just below the body of this. Right? So if you go back to 15 minutes, you see it very clearly. Right? Now the swing trader has entered this trade. He's waiting for 2 weeks to hit 1:4. Now the day trader would go to 15 minutes because that's his entry time frame. Right? Now it has picked his point of interest here. The day trader will target this previous high, because when market shifted structure, market went to create this high. So this high will be the next level of liquidity for the day trader. Or if he's even contented, something like myself, I just target 1:4. But if I want to even target this high, the day trader has is 1:6 right here, and it's done. Then you just need to wait for few hours or a day. Let's look at how long from this point of interest to this take profit, 1:6 trade. How long did it take? Right? This triggered 5th of August, 5th, 6th, 6th, 1 day. So he just took 24 hours from his entry to his take profit. This is a typical day trader. So a day trader has traded and is out of BTC's trade. Why? Why the swing trader is still holding for what? 2 weeks. Now, a scalper does not want to hold this trade. A scalper now says, how can I be holding trade for 24 hours? Right? How can I be holding trade for 24 hours? Now a day trader is saying, how can I be holding trade for 2 weeks? Come on, I want to exit and enter and exit within 24 hours. Now a scalper is saying, no, how can you expect me to enter and exit in how many? A scalper will say, no. He does not want to do that. Right? What would the scalper do? Let's delete this. The scalper now still understands higher time frame perspectives. He knows that if I'm a scalper, I would enter at this point of interest. If I'm a day trader, I would enter at this point of interest. This is 15 minutes. So it's a scalper, right? He will use 15 minutes for his bias, while he wants to take trade off what? Lower time frames perspective, which is 5 minutes order block or 5 minutes point of interest. That is the way he wants to trade. So he does not need to wait for a long time. So what does he do? When he comes here, when market was reversing now from this region and picks the day trader points of interest, right? For market to continue, the scalper will be watching the market. Now immediately the scalper sees a shift in structure, like this, you can notice a beautiful break of structure like this, right, to the upside. Market started retracing. Some levels of imbalance were left here. The scalper will be targeting this region for his trade, so it can easily go to say 5 minutes time frame, right? And now he has seen the direction, right? He has seen the direction based on what higher time frame perspective, which is what the 15 minutes time frame did. Where is this thing? Why is this scattered? Smaller time frame just really messed up my chart. Okay, and now he has seen the direction on 15 minutes that this market is going up. So what the scalper doing? The scalper is looking for regions for him to take his trade, right? He understands SMC also. Now if you look at this, you just have to be so tight like this, because this is a past chart. So market shifted from here, broke above this place, right? So there's a support and resistance region here. This region now is a support and resistance region. It's also resting just below this particular, let me put that at the other block, 5 minutes, right? So it's just resting just below the imbalance right here. So the scalper now would want to take his trade like this. He doesn't waste time. He has seen the direction, he wants to take his trade, so it would enter from the 5 minutes continuation. All right, he'll put his stop loss just below that breaker and target higher regions. You can see the higher this other target. So you can see now the market immediately triggered his entry and pushed to the upside. So let's calculate how long this took. Now the scalper entered at Thursday 7th 16:45, right? You can see he hit TP at what, that same Thursday 7th 19:35. So it took about just waiting for 2 hours and he's out. Still the same ratio, 1:6. Still the same SMC entry setup. You can see the beautiful breaker block he entered with, and he's out, right? While the swing trader is waiting for a very long time because he's patient. The scalper, he knows it's risky, but he's in and out of the trade using lower time frame confirmation, and he still uses higher time frame bias. The day trader is waiting for a day or 2 days for his or her trade. Now the difference between them is just the time frames for their entries, right? The time frame they use for their entries, but all of them still follows what SMC, right? That I am a scalper does not mean that I have no business with higher time frame. I have business with higher time frame because higher time frame will give me the direction. So it means my higher time frame is also 15 minutes. My higher time frame as a scalper, my higher time frame is also 15 minutes. My higher time frame is also 1 hour, right? I will use that for direction. Just like the way I did this now, I went to 15 minutes, I saw the direction to the upside. I said, okay, I just need to wait to look for entry on 5 minutes. 5 minute breaker block, I'm inside. And the scalper is out, still 1:6. Right? While the day trader is waiting for his trade, while the swing trader is also waiting for 2 weeks for his or her trade to complete. Okay? So the thing is, the only difference is over trading. That is what makes the count different. Now a swing trader is waiting for 2 weeks for his entry, for his trade to play out. It means at that particular point he's not taking any other trades. He's waiting for 2 weeks. He has entered a beautiful trade and is contented with 1:6, right? And he's waiting for 2 weeks. Only one trade in 2 weeks. Now a day trader, since his trades complete, right, within 2 days, would want to enter the market again and again. And of course, in the market you can never be correct every time, right? So before the swing trader 2 weeks completes, that day trader must have entered multiple trades, right? Which means he would have made some losses and some wins, some losses and some wins. While the day trader, while the swing trader, if the trade is correct, he would have no win, no losses, no loss trade within 2 weeks. So the win rate of that swing trader would be higher than the day trader. Now for a scalper has finished entry within just 2 hours when the day trader is waiting for 2 days, right? For one day trader is waiting for 2 days, the scalper, within that 2 days, the scalper must have entered multiple trades, because it just took 2 hours for his trade to hit TP. So he will be tempted to enter more trades than the day trader. Now, more trades would have profits and loss. More profits and loss, because he would not be able to win all the trades. You cannot get it right 100% every time in the market. So what happens? The win rate of the day trader now becomes higher than that of the scalper, because the scalper would make many losses as it goes and some wins. Okay, so that is the difference. Where you see swing traders, they'll tell you swing traders are more profitable than day traders. Day traders are more, as long as all of them are making money and they know what they are doing. So it's all on you guys. I have given you the best way I know how to explain their differences. Now it's now on your personality. Just like I said, right? Let me put that down. Let me put that down so that you guys will see it. Just like I said, all three can work with SMC, but traders should choose based on what their lifestyle, their patient level, and their psychology. A swing trader does not have time to be looking at chart every time. So when they come to the chart, maybe they have something they are doing in their Web 2 job. When they come to the chart, they analyze, oh, this direction, okay, so it's a swing trade. In 2 weeks, I'll be waiting. They'll take their entry and they're out of the chart, go back to their work. So that is based on their lifestyle. A day trader will be active to enter trades daily, right, and hold for a day or two. A swing trader don't have, a scalper don't have that patience to be waiting. He wants to take more trades, right? So this is the difference. So as long as your strategy is SMC, right, you can take both swing trades. You can be a swing trader as an SMC trader. You can be a day trader as an SMC trader. You can be what? A scalper as an SMC trader. Okay, this is how it works. You understand? So swing traders get more advantage because they look at higher time frame perspective and they avoid the noise. Once they are in and market goes in their direction, all they just need to do is to wait for it to play out, no matter how long. They can take 1 month, 2 months, 3 months holding that particular trade, right? But day traders want to just do intraday move. They want to intraday just enter, come out that same day. A scalper wants to take multiple trades within the hour. You understand? So that is how it works. So guys, I believe you guys have understand what this is all about. So you can look deep within yourself and decide that I want to be a swing trader, I want to be a day trader, or I want to be a scalper, and you can do more research about it. So thank you very much guys. See you guys at the next video.